We've been calling for this to happen for the past month, and it finally happened on Friday. The fear and greed index finally hit extreme fear once again, as you can see on the right side here. 1 week ago, we were still sitting at fear, and back then I told you I'm still looking for a bottom to form around another extreme fear reading, and that's what we're getting this week. So to end the week, market crashed. As we all know, we hit extreme fear again, and these are the levels at which you usually see bottoms develop on the S&P 500 and on the NASDAQ and on the market. So jumping right ahead into the charts and into the indicators, we have the S&P up first. I just want to speak to you about the S&P because I have a market breadth indicator right here, which is the stocks above their 50-day moving average. And as you can see, we are getting a slight bullish divergence here between the lows right here. You know, this is a little trend line that I had drawn. Let me just make sure I'm in a logarithmic time scale. Yep. So from the lows here from the beginning of October to now, we've gone ahead and formed a bullish divergence on stocks above their 50-day moving average for now. We could still go lower and move to a deeper extreme. We have seen deeper extremes. But I mean, we were sitting at 7%. Right now, we're sitting right around 10.3% of stocks that are that are above their 50-day moving average. Excuse me. Once again, levels where we see bottoms develop. So we are actively searching for a bottom. You know, it's funny because when this rally happened right here, as soon as the rally happened, especially on the NASDAQ, I was calling it. I was telling you that I didn't believe the bottom was in. I've had this bull flag channel drawn here for a while, and where did we go to? You know, we went right to the bull flag. And it's funny to me because when I had this drawn out, nobody was really looking at it. I've had this box here as well for a while. Nobody was looking at this because there was no pattern to be seen. But as you can see, all we had to do was connect the highs here, take the parallel to that line, apply it to the bottom here. Let me actually just copy and paste that line so we get a little bit clearer of a trend line. I think it moved on me just a little bit. And then apply it to the bottom of the channel here, the lowest point. And boom, what do we have? We have a perfect bull flag. If you do remember, and if you follow me on Twitter or X, whatever you want to call it, you know, in my trading system, I like to look at divergences and interesting levels that form right beneath support. So as you can see there, we breached very slightly the lower band of the bull flag here, which once again, we are getting 9 count buy signals here on the sequence counts, which could be marking a bottom here for the markets. And we could see a rally up to all-time highs. We could see a very explosive rally here, especially if we end up getting a Fed pause. More about that later in the video. Make sure you stick around. So I just want to go back to the S&P here to talk about the market breadth. Right now, stocks above their 50-day moving average getting a divergence with the market. If I go ahead and look at stocks above their 20-day moving average, I think we also might be getting something interesting. As you can see, we're also getting a bullish divergence here between the lows from the beginning of October. Stocks above their 20-day moving average making a higher low for now, and the S&P is making a lower low. We could see this come to deeper extremes. We could see it go lower. We have seen it at lower levels, but we got very close to that. We were at 5%. You know, we did see it at around almost 0%, almost like about 0.5% here. So we could still go a bit lower, but it is possible that the bottom is that the bottom was put in Friday here on the S&P and Thursday on the NASDAQ. I call for that because, you know, if you want to get a 9 count buy signal, the 8 or 9 bar has to be the low of the count. So for it to be perfected. So right here, this was the 8 bar on the S&P. The 9 bar went a little bit lower, but as you can see on the NASDAQ, the 9 bar actually remained within the previous day's bar. So a little inside candlestick there. We'll see what that gives us. But once again, we do still have major levels of support here on the NASDAQ sitting right under. We have the 200-day moving average. We are getting closer to the end of the month, so we'll be looking at where the 10-month moving average is. Right now, it's sitting just below us, right around 14,015. So, you know, I think there's a strong possibility that with the Fed, once November hits here, I think we could see one last flush, one last dip, maybe go tag that 10-month moving average. I don't know, maybe we rally back up here Monday or Tuesday, which day? I'm not sure which day. Let's see. It's gonna be on Wednesday. So on Wednesday we're gonna get the new month starting, and that will mark the end. So we'll see where the 10-month moving averages ends on Wednesday. But will we have already tagged it? Because if we rally up, it could pull the 10-month moving average a little bit higher to right to that level, to that 14,055. Or do we close the month around these levels? Next month, start with a little flush down there with the Fed meeting to really tag it solidly one more time before starting a massive rally up. Now, we have these three red candles here on the monthly time frame. I do want to point this out to you because this could be a bullish pattern here. We call this a falling three. So when you get a falling three, you get three candlesticks like this. It could be three red candlesticks, or it could be three green, After a large move up, we get three reds, and then we could get a big green bar here that kind of takes out all of these bars, and in 1 month, we could very well be right at the peak there. I did call this same pattern here forming on the NASDAQ. If you watch my videos right here on this week, when everybody was turning bullish and everybody was telling me why the bottom was in, we're not going to see it, why the bears were, done, blah, 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 all this stuff that people always say when they're wrong. I told you right here, this was a rising three, and that could lead to a big nasty red bar that could take out the whole move in 1 week, and that is exactly what we got. We got a week where we were down 2.9%. Last week, the following week after that bar, we got another flush out move there and down another 2.6%. But I do want to point this out because we're not getting these large, 9% weeks like we do whenever we start a massive move down. So if I just come back up to the top here, if we look at this bar, this was 4.46%, okay. And then we had a little sideways action right under the 10 and the 20 before another massive 7.51% down on the week there. We haven't gotten that kind of bearish price action for now. I mean, yeah, okay, we had 3%. That was pretty much the biggest bar. We had 2.9 there, 3.3. But, we didn't get any, if next week we come down and get another 7% down here, or maybe we bounce, a little doji or something, and then get in 2 weeks get a big red nasty bar, then we can maybe start talking about, okay, has the market peaked? Are we getting a lower high? And is it time to start getting very, very bearish on the markets? But I mean, I don't think so. The reasons why I don't think so is because one, the market breadth indicators are at extremes. I just want to go back to the market breadth indicators for you guys to show you the stocks above their 200-day moving average. Now, if I pull that up here, where is it? Stocks above their 200-day moving average, as you can see, we're at very deep extremes. We're at 24% of stocks that are above their 200-day moving average. And we don't see these levels too often. I mean, at the very bottom here, we had a little bullish divergence where we hit about 10-11% twice. The COVID lows was about, okay, that was pretty bad. It was 3. But I mean, otherwise, you don't really see these levels too often. And oftentimes when we're going down here, when we've actually broken this red line, we got a bottom right there. Once we broke it, we got another bottom right there. Once we broke it, and we got another bottom right there once we broke it. We also got a bottom right here. Let me just zoom into the market. I'm sorry. We actually did get another bottom right here, so you can see this a little bit clearly. Once we broke under that line once again, we broke under it, came back up, and we rallied strongly on the S&P, about almost 6%. If I take a look at the NASDAQ, let's see, where are we? Okay, now we are getting bullish divergences with their stocks above their 200-day moving average, and there are hidden bullish divergences. Make sure you pay attention to these kinds of divergences because just so I can show you guys what I'm talking about here. Let's say I take the lows from March, okay? The lows from March, if I draw a line connecting the lows from March to where the stocks above their 200-day moving average is now, as you can see, that is going lower. And of course, you know what's coming next. If I go to the market and I pick the same point here in March, what's the market doing? It's going a lot higher. So that is a hidden bullish divergence. It is hard to spot. A lot of people don't see these. A lot of people don't pay attention to these. But in my experience, I've learned that these are very, very important. You do want to be watching these longer term divergences here. And we are also getting it almost getting it here with the lows from the very bottom there in January/December. So yeah, we could be getting a very, very powerful rally coming here for the markets. Coming starting next week. The on the weekly chart here, NASDAQ is still above its 50-week moving average. If I go to the S&P, we just broke the 50-week moving average, and this is max fear. once again, we have extreme fear happening now. Everybody is seeing this, and this is when you want to turn bullish. You don't want to follow your your emotions to say, oh my God, we just had a big nasty red bar, we're breaking the 50, it's all over. Man, we still have a bullish alignment of the moving averages here on the weekly time frame. Okay, maybe the 10 dropped below the 20-week moving average, but we still have the 50 above the 200. We still have the 10 and the 20 above the 50-period moving average here on the weekly time frame. Same thing for NASDAQ. We just, the 10 just crossed the 20, but the moving averages are still bearish. And until that happens, we're not going to get any kind of sustained downtrend until these two moving averages get below the green one right here, the 50, and until the 50 gets below the 200. That's when you get your major bear market. Now, I don't think it's going to happen just yet. I think there still is a strong possibility that the markets rally to new all-time highs here, but we will, of course, be watching to see what happens. I also want to take a look at the Russell 2000 here, because the Russell 2000 is at a critical level of support. And if you don't know who Jesse Livermore is, very famous trader here, Jesse Livermore, he loved to trade these kinds of setups. And now, yeah, he didn't really open positions right here. What he did, Wall Street legend here in the beginning of the 1900s, he would wait until the market reached an area like this, okay, like we are now. He called this a critical point. Once we reach this critical point, he would see what happens. Do we break it by a few points? And he's not talking about what happened here last week where we break it by 2 points, 4 points on the Russell here. That's nothing. If we start breaking it, if we start getting to, let's say, 1609, I don't know, even into the 1500s, then he would be okay. We broke below that level of support, which is also the peaks right here. I hadn't even seen that. I could very well draw a rectangle right here as our boom. That could be our critical level. So you want to be watching what happens surrounding this critical level. The Russell has had a major downturn here since the beginning of July. We only had 2 green weeks, since July. So the Russell is due for a big bounce here. And do we get it now? I think so. And if the Russell starts rallying from here, I'm telling you, you want to be watching to see what happens, of course, on the S&P, what happens on the NASDAQ. But I think there's a strong possibility if it bounces strongly from here, Jesse Livermore would get in. Let's say it bounces off, we get back up to the 1700s. He would get in right there. And it probably tells me that we're probably going to test these highs right here and maybe even break them. But nothing's certain for now. We are still watching to see what happens. The Russell has a very bearish chart. I'm not going to lie to you. I mean, you have the 200-week right here. Let's see if the index has a little bit more history. You have the 200-week moving average sitting we're actually below the 200-week. So, if we do get a rally from these levels, it could be super powerful here on the Russell 2000. I think these are very interesting levels for the Russell. If we can bounce off of this level. So we are going to be watching what happens here on the Russell coming into next week. Now, I want to pull up a MACD because I do want to see what's going on these smaller time frames. I do want to start with the NASDAQ here. So NASDAQ daily chart canceling out the bullish divergence from those lows. Okay, but what's happening? We're probably going to form a large bullish divergence with which lows? The lows from the very bottom, the start of the move. Oftentimes, with these bullish divergences, once again, this is a hidden bullish divergence. You want to be looking at the beginning of a move. In my experience, that's what I found works best, especially for the hidden ones. So the beginning of the move was right around here. Okay, market, once again, going a lot higher. And the MACD, flat. If we do get a bullish divergence here, we come down, break this a little, even come down and just tag it and just go. That is a hidden bullish divergence. And a lot of people are going to be looking at that. A lot of people are, that is a sign here that we're getting very oversold and that there could be a strong, powerful rally coming because, I can get into that in another video. But something else I want to show you guys. Let me just go ahead and go into the intraday timeframes a little bit more. 1 hour time frame S&P 500. What is going on? We have bullish divergences across the board. We have a new bullish divergence forming here from the lows from the 23rd of October. Same thing on the NASDAQ 100. Actually, not the same thing on the NASDAQ 100. NASDAQ 100 moved to a new low here on the MACD. But let's just go ahead and take a look at the futures because I do believe in looking at both. And here, the 1 hour chart of the cash indexes is basically the same. I mean, indices, I'm sorry, is basically the same as the 4 hour chart here of futures. So as you can see, the 4 hour chart of futures looks very much like the chart we just saw there for the hourly. So let's just go ahead and get into an hourly time frame. Once again, this is what I used here to call the very top here. We had a wedge forming the very day of the top when we back tested the breakout of this large trend line here, our major trend line. When we back tested the breakout from that level, we back tested it. We came and hit the top of the wedge, major resistance. And I told you on that day on my Twitter, the link will be in the description if you want to find my Twitter where I post live updates. But on that exact day, I told you, be watching for the top of the wedge there, because I do think the bottom is not in right around here. I didn't think that was the bottom. It could have been. I was not convinced. What happened? We ended up turning down. I told you, even up here, I told you if we start, dropping below the 50 here, start moving strongly in the other direction, and then we can't get above the 50 and we start getting lower highs, we're definitely going down to that lower band of that bull flag. And what happened? Boom, we came down. This was a first opportunity. Second opportunity, I told you here, I told you take a little bit of profits. That's what once again, not financial advice, paper trading, whatever. This is just a trading system. This is my trading system that I've developed and that I find works pretty well. So we dropped below the 50 here. We tried to get back above it, but what happened? We were above the 50, but we got a lower high. Dropped back below it, We came back to it, another lower high. Dropped back below it, and then we kept going down right around, I believe, where was it? I believe it was right around this level here. I told you, okay, maybe it's time to take a little bit more profits off the table because we're reaching a level of support in the 20-day moving average. I told you on this morning, you can go watch the video, but I told you, we could get some crazy sideways action. And look at these candles. Look at this large doji. I mean, from bottom to top, this doji is, 1.5% there. So we got some pretty important moves there during the day before continuing lower, of course. And then once we reached about 14,200 here, right around this level, I told you, okay, now I'm taking all of my profits off of the table because I'm looking to go bullish. Okay. I originally opened up a little position right around here that ended up getting taken out. We went right down to the lower band. And what did I tell you? I told you I love buying. I love buying under support when you have divergences forming. And what happened? We had a divergence form between here and right here. As you can see there on the MACD, we have that divergence and we bounced. Now, of course, I like to give my opinion and I'm honest. I don't know what's going to happen, of course. But, I do think that these are very interesting levels to be taking a close look at the market. And once again, if I go here and look at the 15-minute time frame, what happened? We dropped right below support. And this is what I was looking for right here. Once that got taken out, I said, okay, then we're definitely going down to this lower trend line. And once again, reset it right there. And we'll see what happens. Now we're bouncing above it. Maybe we come down here, go around it. But I do think these are very interesting levels to be taking a look at the market and maybe to flip the trade here from bearish and to go bullish. My short trade my sell was a short-term trade. But I do think the market is going to rally here. If we do get a Fed pause right now, the market could rally to all-time highs. That is usually what happens in the yield curve cycle. You usually get a yield curve inversion followed by a stock market top. We got the yield curve inversion here after the market peaked. And a lot of people don't know this, but we got a yield curve inversion right here. The market peaked, and then right around here is when the yield curve inverted. That told me that, okay, this whole move down is probably just, shaking out the weekends, and we're probably going to rally up to new all-time highs. Now, maybe we don't. Maybe we form a lower high. I think it happened once before in history, but usually in the cycle, we get a stock market top after the yields invert, and then the big crash. What tells me we're going to get a big crash? Now, once again, you like to play stats here. We had one of the biggest reversals, I think top 5 off of a 52-week low here on the NASDAQ. And when that happens, hasn't happened every time on S&P, but on NASDAQ, every single time the NASDAQ has moved to new lows. Once again, what is that telling me? It's telling me that this entire move up, once the bear market starts, it's most likely going to get taken out, okay? We're most likely going under this level. I don't know when it will be. I don't know what year it will be, but there is a high probability we come here and take down 10,450 or 500, whatever you want to call it here on the Nasdaq once the bear market starts. I don't believe the bear market has started yet. I think we're, in a topping process here. I think the bull market is still intact for now, but we will be watching to see what happens. If we just start dropping and going lower, okay. I do think that we're going to break this eventually. But for now, I think there is a stronger chance that we rally up here to all-time highs to really suck everybody in here. Everyone who's super bearish right now. If we break to new all-time highs, we're going to get a massive short squeeze. This thing is going to go soaring. Everybody's going to turn bullish. And at that point, when everybody will be bullish, you can tune into this channel and you can see what I'm talking about. I'll be talking about it's time to sell. Once nobody sees it the same way, nobody thought that we were going to crash down to this lower trend line here. Whenever I told you, that is exactly what happened. All right, so I just want to switch off from the MACD, switch off from the market breadth indicators. There is a ton of stuff I could be showing you, but I believe this is really the most important things right here. We do have a 9-count buy signal that has developed on the markets. The Nasdaq got it. The 8 bar was the low of the count, so it is a perfected buy signal. And on the S&P here, the 9 count is the bottom. Is the lower end of the count. So right there, this is now a perfected buy signal on the S&P as well. Okay. If we move down to the 4-hour charts, let's see what's going on. Maybe we have something happening there as well. I'm going to switch over to the indices. Let's see. We had a 9 count right there on S&P. Okay. Okay. Nothing to note here for now. The Russell is getting a ton of 9 counts once again. Got a 9 count right there. So we're looking to see what happens. If I switch over to the futures, once again, you see there, this program is my chart here is made so that the 9 count here becomes the low of the count. So, the low of the 9 count here marks a level of support / resistance if it's, the low or the high. In this case, this is support right now, and we're going a little bit under. So once again, this could be a golden opportunity for the bulls here on the Russell 2000 once again. If I go ahead and remove this 9 count here, boom, and I switch over to the, to the moving average convergence, divergence, what's going on? What's going on? We broke this lower trend line. I told you right here we had a 9 count. I had a position right here, small position. It got taken out. I don't care because we just made a ton of money on the way down, and we're about to make a ton more money here on the way up. We're getting these bullish divergences on the 4-hour chart of futures, which is similar to the hourly chart of the cash index. We are below, once again, support here. These are the areas where everyone's like, oh my God, okay, we broke support. Like, this thing is just going to keep going. I don't know what to do. But this is when you want to be turning the most bullish, when you start going under support and forming all of these divergences here. The chart doesn't tell us that it's bullish just yet. The chart is still completely bearish. But I choose to speculate and to think that, there's a strong possibility here that we could get a big bounce. Either we get a higher high or a lower high, I don't know, but I think we could get a pretty powerful bounce here, which is why I have now closed my short positions and I'm now looking for a bounce, and I'm actually looking to go long here because I do believe the markets could rally up to all-time highs, and I do believe the Russell could have a massive rally. I think people, there's a ton of puts getting stacked here on the Russell. In tomorrow's video, I'll go over the put to call ratios. Not the put to call ratio, over options a little bit more. Let's just go ahead and take a look at the put to call ratios, actually, now that I'm talking about it. So PCC and PCCE, we're not getting any crazy spikes yet. Usually you get these spikes, nothing too crazy for now. Usually you get these spikes when you go a little bit sideways, around a little bit scary area. So here, if we start going sideways a little bit here, I'm pretty sure we're going to see a huge spike in the put to call ratios. Everyone's going to turn bearish, and that is when, once again, you want to be looking for a little bit higher lows to develop. Okay, I told you want to be looking for higher lows. It doesn't matter if it's 1 point, half a point, 0.1 points. I don't care, as long as you start getting one higher low, maybe another one, and everybody is just stacking puts like they are on the Russell right now. That is the sign. That is the sign you're about to have a massive short squeeze. And I do believe that, the short squeeze that we actually got here recently, this one right here, that trapped a ton of people, I do believe this was just a preview of what could come. And I do believe, if I'm speculating even a little bit more here, I do believe we could get a massive short squeeze to the peak here, you know, we could potentially see some sideways action, some selling off here to shake off all the weak hands once again. But once we break this peak and then we break the all-time highs, oh my God, I think we're gonna get a huge short squeeze. I think we could even go, see that I've had this little thing here on my videos for a while. I think we could go ahead and test this little circle here. I think we could go and test the upper band of the bull channel. This is a longer term channel for the bull market. I think there is a possibility we go and tag this here if we do end up getting a higher high here in the topping process. If we go here and tag this, what is that going to set up? You know, it would make sense to me. We would be setting up a massive bearish divergence. Maybe it doesn't happen. This is around April, maybe around April, something. I don't know. But we will be setting up a massive bearish divergence in the monthly time frame for the NASDAQ, for the S&P. Let's see what's happening with the Russell. Ooh, Russell doesn't look good. But, you know, I do think there is a possibility that we go and tag, let me just go back to this chart, that we go and tag the, what's going on, man? What's going on? I do think there's a strong possibility that we go and tag this channel if we end up getting a massive short squeeze once we break all-time highs. I don't know. You know, that's like 23,000. I don't, maybe we don't reach there. Maybe we get just, you know, below it. Maybe we just go a little bit above the high and crash. We'll see what happens. But I think there is a strong possibility that we set up the bearish divergence in the monthly time frame for the markets before getting the big bear market and the big crash that I'm not sure where it's going to take us, but it's going to take us really deep. Thank you for tuning into today's video, and I'll see you in tomorrow's video. Take care.